Okay, g'day guys. Just trying to get the trade zone up. All right. Now we'll just wait a couple of minutes just to get everyone online here. Let me have a look. Okay, everyone hear me okay? Just a bit of a response there and we'll get this thing started. Let me just see if I can give you a bit of a look there. Let's have a look. Oh. In Australia there. So just let's kick this off. I want to get we've got a little bit of time to run through this, and there's a fair bit of stuff to sort of bang away. And being out here in Australia, it's coming up at 10:30 at night, so just a little bit balmy out here in the countryside, I can tell you. Great area for everyone to sort of chew the fat, work out what's going on. Now, when we come back into the non-farm payrolls. Now, there's a little bit of a survey before the actual numbers. Let me just get some headphones on here, might be easier. Okay, so with those, the survey itself, everyone wanted to know a bit more about the numbers, a bit more about technical analysis and a few other things as well. So what I'll just do is just come back to the core concept of fundamental analysis. Now, the central banks themselves, obviously, they enact policy based on what the economics of their environment is or their economic conditions to try and keep that inflation around 2 or 3%. Now, that's sort of gone out the window a bit since the GFC, obviously. You know, inflation was sort of at zero for a long time. But now things have come back into play. Now, non-farm payrolls take out all the military, take out all the farmers, it's basically a huge portion of the US employment side of things. They take out all the erratic sort of numbers that would sort of throw the numbers out week in or month in, month out, and you've come up with the main core employment group, people who actually go out and work for other people, basically. So these numbers now, why are the non-farm payrolls so aggressive? Well, it is a big number. It's a very transparent number on economic conditions. It's a very big social number for confidence. If the numbers are really good, then, you know, gives the retail sector a lift, gives every aspect of basically the economy a real strong injection. But where these non-farm payroll numbers do get an extra bit of bite is when the central banks themselves start to focus in on the core numbers. Okay, when they start to talk about, well, we want to see employment capacity, we want to see, you know, real good jobs growth, and that'll lead into higher inflation because they know if people have got jobs, they've got money, and then they're ready to sort of go from there. Now, one thing just before I'm not really going to go on tangents here, but it is going to be a little bit busy. Make sure you get your trade station up. If you're ready to trade, have your trade station already tuned up and get things organized, because as we go through this, we've got about 12 minutes before the release. You do want to have a plan sort of really structured. Now, what I will do is actually really bring it back to the core components, right, of actual trading. Now, we've been sort of banging away here and there. In the past, what we've done is we've actually focused on a lot of the economic numbers, primarily because they're the only things sort of moving around. And it was a bit of a misconception that all we did was actually trade the data, and it couldn't be further from the truth. But one thing that we want to do is identify good situations where there are opportunities to take some cash. Now, generally thinking, and this is coming back to the new site as well, where we've got, we are looking for the good trading opportunities. What we're looking for is clear direction, okay, and then sort of trend lines as well. Now, what I'm looking at here is I've got the Aussie and Kiwi, right? They're sort of getting dragged all over the place. There's no clear direction from those two central banks. I'm not too interested in sort of banging away the Aussie and Kiwi. They will get dragged around from pillar to post. Now, this US number, I should say, is, you know, predominantly going to impact the major currencies. Okay, it's the US against everything else, and this is where the action is. So if you're trading some of the crosses, well, then you may get a little bit lost. Now, so Aussie and Kiwi, you know what, they are worth trading. Okay, if you are a big fan of those two, and I am. but I'm looking for an easier sort of trade now. Just looking at dollar yen, you can see here a very, very clear downtrend, right? This is not too indifferent to looking at the dollar index, okay? Now, and I know this is a big number and it could have a big turnaround, but I'm not going to get overly greedy. And one thing you can do, and we did it in the past years ago, is actually quite funny some of the times, and they got a bit painful, was, you can actually, with some of the tools we've got, place pending orders both sides. Now, that's a little bit of a recipe for disaster. And let me just explain, if you were placing pending orders both sides of, say, the dollar index here, now the dollar index is in a downtrend. So say the numbers come out strong, you will get that initial spike up, but then it'll hit a bit of resistance here around that sort of 92, 90, 93, the figure around there, and it'll come back on itself. Okay, so you're fighting the overall short-term trend and the momentum. The easiest trade here is down. There's nothing there to stop this sucker going down, right? So if it comes out weak, it goes down and it keeps going down, right? So when it goes up, hits this resistance, it gets some traction, because you might be getting in here, say 10, 20 points above the market if you're lucky, and then all of a sudden it drops 20 points and all of a sudden you're nursing a nasty position. So what I'm looking for is, instead of like covering all bases, I'm focusing on, coming back to the major currency pairs, the pairs that make very clear sense to me. Okay, now, until a short while ago, there was a sort of bit of an uptrend here. You can see where sterling dropped down last night, down through sort of 130, 185. I'll tell you what, I underestimated that move, and it was, once again, a central bank move. To me, sterling is now, it's not going down yet, but the Bank of England are not doing what the ECB are doing. Okay, they are sort of right on the bench or on the fence, right next to the sort of RBA and I guess the RBNZ to an extent. So to me, that's a change in short-term trend for me. I like sterling down now, and people will be very happy to sell it. Euro, looking at this sucker here, it's obviously the reverse to dollar yen. It is looking gorgeous to the top side. Once again, if the US numbers come out come out strong, it's going to drop. It depends on the level of variance, of course. So I'll come back into the numbers just very quickly. 118.40. So if it's with strong numbers, it's going to hit this. It's going to be traction. It could spike back up, and if it's only mild variance, well, then that's what can happen. Okay, so just on the finish on the charts here, I want to get into the actual numbers themselves and explain that, is looking at the euro uptrend. Okay, I'm going to be looking for a trade on the top side in euro. Sterling, I like it down. I'll be looking for a trade the downside in sterling. Dollar yen, I like it down. And I'm still waiting up here. I've got a trend line trade order on in dollar CAD to the top side. I'm just going to leave that on there for the moment. But what I'll be doing is having a look now at the core components of the numbers. Now, don't forget, we do have US and Canadian numbers here at the same time, right? So there is a bit of action to sort of consider. I'm just going to bring it across. I won't bring trend line trade across here. We've got 7 minutes, 6.5 minutes. Now, look at these numbers now. I think Bob and I think it was Tony or some of the other guys were saying, look, there's a lot of numbers here. It's a little bit convoluted. It is a little bit, right? Understand that. But the main number they look at is this non-farm payroll number. That's the top tier number for this release. The unemployment figure, yeah, it's an afterthought. Yeah, righto, it's right on there. Yeah, cool, whatever. No one really gives a toss anymore about the rate. It's actually so low in the US. I don't think anyone really believes it. But one thing that the Bank of England started to do some time ago, which the Fed started to look at very closely, was the average earnings. Because there wasn't much change in the employment number, I wanted to see if people were earning more or earning less, right? So that's probably so you probably got the non-farm payrolls number itself, maybe the rate, and definitely average earnings, okay? So you're generally looking for some sort of conformity with those numbers to get a real strong move. So if we had a number here, say plus 250 on the non-farm payrolls, 4.2%, and average earnings were plus 0.4. Well, the US dollar is going to go through the roof. Okay, so, and as I said, you don't have to cover all bases. Look for the easiest trades. This is the way I'm going to sort of play it. So dollar yen, euro, sterling, and I'm going to leave my dollar CAD order on there for the moment. Okay, so just looking at the CAD numbers too, you want to make sure you've got these up here. Because if those CAD numbers are outrageously bad, well, then I will go in. I've got 100 points to get myself onto the CAD chart and cancel that order. Okay, so you've got to think across the spectrum. I was going to say laterally, but you've got to think a lot of things. If you are trading aggressively, then make sure you know exactly what you're doing and what you have to do after the event. So what I'm going to do is I'll just bring this across. Some of you guys may be aware that have been around a while. I use Trendline Trade. This is an execution tool I built. We had it built about 4 or 5, 6 years ago, and it's actually the number one thing. I actually ended up getting it up primarily just so I could actually trade the US numbers, because we didn't have enough arms and legs to actually hit things. So what I'm going to do is I'm just going to set up, it's going to look like I'm setting up some OCO breakout stuff. So what I'm looking to do is I'm only looking to get into a trade here if the numbers are really bad or really good, right? So I'm just going to go in with, I say 5 lots on these things. I'm just going to have a standard order set. Now, if you are sort of placing pending orders in the market, and the only reason I'm doing this is, I think, Bob, you mentioned it, it's a pretty aggressive number. And with the non-farm payrolls, what you can get is, because we've got some major trend lines here, we've got some major trends happening, we're not going to get a second bite. So I'm willing to take a little bit of risk here on the actual release to get the trade on. Now, some of these trades I'm looking for, predominantly weak numbers. Okay, and if I get a weak number, dollar yen will go down, euro will go up. And we'll go from there. The sterling trade won't get executed. So I know I'm not sort of spraying it all over the place. So what I need to do is, I've got this OCO on. I'm actually just going to put a trade cross on. So these are the orders I want. I've got euro up here. Now I'm a bit conscious of the time. Sterling. Where's dollar yen? Okay, right. And that. So I'm placing these orders. They're going to be 20 points either side of the market. Now, if I place an order here, okay, you're going to see what I'm looking for. Euro. I'm not looking to sell euro, so I'm just going to close that one. I'm not looking to buy sterling. I'm going to close that one. I'm not looking to buy dollar yen. Okay, so what I'm doing is I'm sort of isolating some of the risk, okay, by going with the trend, right? The trend is our friend. We've got 2 minutes here now. So what you need to do is, and I've also got a dollar CAD order in the background that I need to just get another MT4 up, which I've got that on, and make sure I can access that. So one thing is, obviously, if the things go a little bit pear-shaped, you want to be able to cancel things as quickly as I can. So what I'm looking for, so with the numbers, I'm looking for a number around 150, right, or over 200, right, with the non-farm payrolls. If it's above 200, the dollar's going to scream to the top side. Okay, so the dollar yen is not going to get triggered. Euro won't get triggered. Sterling will come into play. So that's what I'm looking for. But at the same time here, I'm looking at these entry levels, 87 in euro. If these orders get close before the release, now we've got 1 minute to go, I will jump in and cancel those and look to trade live. So I've got T-Rex sort of loaded up here as well. Now I've got on the main screen because I want to sort of see what these numbers are. But let's just keep a close eye on this. So 87 topside euro. So I'm still very confident. If these numbers are really weak, I'm super confident euro will go to 120. I'm sort of opening myself up here to a little bit is actually, the retracement. And on part of the survey, what you can get is, this is the key level, right? So I'm looking at euro at the moment, it's at 65. That's the level. So it should go up, say 15, 20 points, come back to 65 and then go. That's what we're looking for. All right, guys, you've got 20 seconds. As I said, if this number is close to like 170 to 190, I will just cancel my orders and I'll look to trade live. All right, then I'll start to look through the numbers and look through those CAD numbers as well. You ready for it? 205, right? So just having a look here. No, so nothing's really happened there. So 10 plus 10,000, 6.3. So really good numbers for dollar CAD. I mean, euro, I mean, it's a little bit stronger. Where's sterling? 131.25. Okay, so that's sort of dribbling off. Let me just go over here to the majors. So just having a look here at, market's not really happy with that. So if anything, euro's come under a bit more pressure than what I initially thought. Dollar yen has shot up a little bit, so that's why that wasn't going to come into play. Now, I'll come back to the other core components. Just look at the breakdown here. The unemployment rate, 4.3. Average earnings as expected. An extra 20,000. An extra 20,000 new jobs. It's not a huge bloody number, this is the unfortunate thing. The market will anticipate this not only for the week, but very hyper for the last 24 hours. What they're looking for is some sort of ricochet. So with this, and I'll just get the dollar index up here, that's not going to turn the dollar around, right? So with that number, have a look at the currencies that do make sense. Now, the euro to me, I think could be one that comes back a bit. Definitely dollar yen is definitely worth looking at. So I've got a level here at 1080. Okay, I like the look of that. Dollar CAD's at 126.13, so a little bit stronger dollar, but I mean the CAD numbers were pretty good. Let's have a look at 6.3. Actually, the CAD numbers were as expected. Full time up 35,000, minus 24,000 for casual. Nothing really there to write home about. So just coming back to the dollar CAD, I'm happy to leave that order on there. I've got it at 58. So all I need is, and I know the market in dollar Canada is short. Oil is back down here at 48.5. So we could get a nice little run up here to 50. That could get us set and finally get me short into that dollar CAD position. But I think, if anything, I've just got, I'm just looking at euro here. Okay, so what I was doing there on that number, so I was on the other screen. It's hard to show two screens. So I had the whole spreadsheet here. I can actually close all those orders all at once. I gave it sort of like 20 or 30 seconds to see what was going on, and then I just sort of closed them all out. Primarily, there wasn't enough variance in the number to really give it a kick. And this is where you've got to come back and think, okay, well, what does that mean to us? Well, you know what? I think this is a good chance for a false breakdown here in euro. I think euro could come back. I mean, that's not a strong enough number to get euro moving. And as it is, actually, cable's starting to sort of drift a little bit lower as well. So there is a little bit of residual strength. But as I said, Aussie and Kiwi are just going to get dragged around with what's going on. And I think dollar yen might be the currency. So the core part here is this, as I said, there's so much anticipation. Over the next 10 minutes, the currencies will really settle down. Right? What we'll see is, I think dollar yen must have just spiked up there. What we'll see is you'll see the energy come out of the market, and that's when it's probably a better time to start to trade. These little breaks here, all the market is doing is probably tweaking out some stop losses, say in the euro. As I said, I like sterling down anyway, but it's a little bit sticky here at the moment. I didn't think there was enough variance to really warrant getting into it aggressively. If anything, the dollar index to me looks like it might be a good idea to get some out around 92.90. All right, so I mean, pretty disappointing if anything, you know. You guys got anything you want to say or along those lines? Hopefully you didn't lose all the sound there. I know it looks like a couple of you did initially. If anything, this is one of those ones that you would say is a general fizzer. And your anticipation and your work as a trader, right, is to prepare yourself for the opportunities, right? And this is what we're sort of doing here with the new site. Hopefully, well, I guess as far as today or tonight, the site is pretty much fully operational. We'll get the next best trades up there and a few other things. You'll see that a lot more active next week. We've had it on hold pretty much for the last 4 or 5 weeks, just waiting to get all these bits and pieces up. But if you come into the daily analysis, this is where you're going to find a lot of the good setups, get a general run through of what we're actually thinking. Obviously, the non-farm payrolls was a huge component of this. So make sure you sort of use those tools. And the number one thing I would encourage you to do is get into the live trade zone there and actually start chewing the fat, because there's a lot of good traders in there that are using this facility, and you can find, you can just sort of walk into good trades. And actually, if you are thinking about trading, it's not a bad idea to throw an option up, an idea out there, and see what the rest of the team thinks. Okay, so just looking at, I mean, look at the retracements here. So Aussie's back above the trend line. Euro's just about there. You know, you feel like a bit of a goose. This is what happens when you got too many screens up. So I've just got to get. So what I'm going to just do here. There's nothing better than getting onto these things straight away. The idea is, if you see the opportunity, say a number like this isn't too variant, you know, generally what I would do is get up the chart straight away. That's why I left that dollar CAD there. This one here, I'm looking to put this on. I'm just going to throw Trendline Trader on this. New setup. And I just want to place a trade here. I've already got this sort of set up. So resistance, let's change it to range. I'll give you guys a run through this down the track, because I just want to get this order on. So I've got to. So that's going to cover me basically 150 point take profit, split take profit at 75 points. Put that in the market. So that's going to be sitting there, unfortunately, at 68. The entry now, 12 points from the trend line. So that'll follow the trend line down. So that's going to be in play. I'd say that was probably one of the nicer trades, actually. As I said, with the dollar, you're looking at a number of key features, right? So looking at dollar yen, say down around 110, say 2030, you've got a good chance here, even with a bit of slight dollar bullishness, for it to sort of rally, 50 points. And that's enough for it to run out of steam and then start to come back on itself. So I don't think it's over just yet. I think I'll get set here. It's just in the 50s. All I need is another 5 or 6 points to the top side, and I'll get into that position. As you can see here as well, understand the data and what it's going to do to the market. As I said, you'd be pretty pissed off if you were long euros and you had a little stop loss just underneath here. You're going to be stopped out, and it's more or less probably going to come back on itself, or it's just going to chew along that trend line. And that's, so I'm not, now these currencies that are right on the trend lines can get a little bit messy. Euro is, well, it's sort of almost good enough to have a crack at. I like dollar yen more, and obviously dollar CAD, but as you can see, dollar CAD's already started to peel back. I need it back up here into the 50s as well, another, 20 or 30 points above that high. But all I need to do now is just let the market do the work, right? Don't rush in. Don't chase these things either. You notice there on dollar yen, I've got a trend line. I've got direction. The data wasn't big enough. I'm just going to sit here and wait at my level. Now, this thing could dribble off. If you're starting to hit it down here in the 40s, what you're going to end up doing is putting on more risk, because you've still got to have your stop loss in that same spot. I'm going to have it, but you've now opened up another 10 or 15 points of risk that you don't need to. All right. And that's pretty much it, guys. What I'll do is I'll reschedule these webinars to be a bit longer, because by the time I got everything sort of hooked up here, we're almost run out of time. So let me look at Euro. I've got a feeling that's going to be higher by the time I wake up in the morning. So anyway, we'll extend that. It's good to see everyone online. Jonathan, Robert, Gary, Tony, Ivor, Casper. I mean, a lot of the usual crew here, which is good. Mark's is saying their gold was plummeting. Let me just have a look at the metals. Yeah, that's probably actually a good reason for that too, Mark. The gold would plummet, if the pressure's off if the US dollar starts to go in like a dollar meltdown, well, then that hypes up gold and everything else. So you can sort of get a little bit of see what the market's thinking as far as are they comfortable with the numbers? They are. Okay, that's a little bit of a dollar strength situation in the sense of it steadies the economy a touch, because the employment numbers a little bit better, doesn't really push the Fed towards raising rates again, but it does take the pressure off like absolute carnage. So you can see gold there, yeah, it's off at $60. That's not a bad sort of little move. It's always good to have these extra commodities and metals and all these sorts of things around, so you can sort of see, they're instruments that we can gauge what investors and traders, where their comfort levels are. And they seem to be quite comfortable with those numbers. All right. Anyway, as I said, pretty short, but I will extend these webinars because I want to sort of explain a few more things to you and sort of explain the structure around the various components of, not just the technicals and the trend lines, really dig deep into these fundamental numbers because they're all different for each time zone. Okay, the non-farm payrolls, the most aggressive employment number on the planet. What you're looking for is understanding, are the government payrolls employment important, manufacturing, all these other numbers. They sort of fit into place, but they're not absolutely prevalent. Oops, there's the other MT4 going a little bit nuts. So that's pretty much where we are, guys. Did I get set there? It must have been bloody close in dollar yen. I was just trying to have a look there, see if I've got set on the other one. There's my dollar CAD. It's still rocking away. You can't be too far away. I'll keep an eye on that 81. So, 69. Sorry, I'm a little bit out with my math. So I'll see how that goes, guys. But then, so that's the way we want to do it. So the idea from here is I want to really tune you guys up, and I can only do that by you guys interacting, giving me feedback, whether it's on components of the site, whether it's in the trade zone or anything else, because there's so many things for you to find here, and there's so much good information that the whole idea of the MyFX Trading Hub is to get everyone sort of working on the same page, and that doesn't mean like have the same opinions. The more different opinions, the better. And that's where the real sort of the fun's going to come into it, because what we're going to be end up doing is really nailing these next best trades, and you guys hopefully down the track will be a part of that. And we've got a whole heap of plans about doing a whole heap of gorgeous things with sort of everyone and making it a lot more inclusive. So get into the site. As of right now, it's probably fully functional. I appreciate your patience with the logging in issues and all the other sort of bits and pieces, but knock around the site. If you see something that you think could do with a bit of tuning up, don't forget, come back into that 247 trade zone. There's a feedback here as well. And if you need IT support, make sure you jump on here as well. Myself and Mark can tune you up, as well as, look into anything you've got going. And by also, probably the first time a few of you have had access to it, but make sure you go through the Pro Trader course. And don't forget the FX Kickstart, and make your way through those courses. The more you go through those, the more you're going to understand when I start talking about, those live events. They are exceptionally fun. Okay. Yeah. I was taking it pretty easy there. I didn't want to sort of get too aggressive on make sure the systems were working. But, I've hit 6 or 8 of these currencies at once on a big US number, and you can take a lot of cash out of it. And on the other side, I've hit it a couple of times and had a few errors. But what we want to do is isolate the best trades, and we're going to make a lot of money. I can feel it in my loins. All right, guys, thanks for joining me. We're going to get a video archive, so you can always go back and check out the webinars. And this is how it's going to go. I think it's going to be great. All right, we'll catch you later on. Have a great weekend if I don't speak to you, and we'll see how we go. I think Euro's going to be higher. I think dollar yen's going to be lower. Sterling, probably back where it is. All right, guys, have a good one, and thanks for joining us. We'll see you next week. What I'll do is with the elite members, you'll get obviously updates on the next best trades when they're updated, but I'll keep you guys up to speed with the webinars. What I want to do also is get some feedback each week. I'll send out some surveys. I want to get some feedback on what you guys want to learn. We want to do at least one really good educational piece each week, whether it's on just simple stuff, trend lines or anything. But I want you guys to direct the learning, and we'll go from there. All right, thanks, guys. Appreciate it. Cheers, Matt, Jonathan, Casper, everyone, Bob. All right, beauty. Cheerio.